Good afternoon and welcome to the FX Daily Wrap-Up. And we're seeing the euro continue to stay under pressure. To start out the week, we had 966 as our bias chart support. You have it here listed on. Here's 965. It's actually like 965.8, 965.9. So henceforth, we said 966. And that kept the market, or held the market initially to start at the beginning of the week. We rallied. And once we got past that, that became a pivot, because you can see here as we rallied back here, we ran out of gas, we fell back, made new lows. Now we rally back up again. We basically poke our heads above the foxhole, maybe 1 or 2 pips, and start to roll back down the hill again. And obviously this has a lot to do with the cash dollar index certainly making its run up here, and we'll take a look at that. And the cash dollar index is still staying strong. We had a pretty good sizable, close yesterday as we took out this entire level here, and we're actually adding on to that. Now we have our bias chart resistance today at 99.29, and we'll see how that goes and plays itself out. But we had the big option strike today at 110 in the euro. I thought we might see a play going the other direction once we got past that strike. But we had the move actually before then, and certainly we weren't expecting a move to come back with any significance because we were so far low. And but we did make it up back here to the 66, but we've kind of rolled back down the hill. Support comes in on the bias chart. I think we have it for 920, and after that, we've got 889. Let's take a look here. 920 and then 889. Low today was 922, so not bad. I mean, we do this bias chart at 3 a.m. Central Standard Time here on the European Crossover webinar. As mentioned before, now's the time for the seasonal offer. We buy 1 month, get the next month free, or on a 6-month plan, you get a 25% break, or on an annual 35% break. But once again, like I said, if you're not available during the European Crossover webinar, Still Is records that, makes that available an hour and a half before the New York Open, so you can actually get an idea. And plus, the bias chart is posted in the chat room, so you can get a feel. But if we go and break lower, there's some good support here on the euro. At least I feel coming in at 889. Comes in right there. We're looking at it actually right. You can barely see it. I can pull it back a little bit. We're looking at it during the European crossover, but comes in at, I've got here 889. So a dip that would probably step in there. You can see these little touches coming across here. We could maybe take out new lows and then push up a little bit higher, and that would just offer really just an opportunity to resell this market, because you can see here from this daily trend line, we've had that in place for a little bit of time here. And I always put my tags through the bodies, because that's where the most volume is. So you can see how that pretty much came in here and checked this market along with that 1075, and this euro has continued to stay weaker, and that's really been the only way to play it. Every time it rallies, it just makes another new low. So people keep saying there's going to be a rally. I don't know when there's going to be a rally. I mean, I don't know. Maybe at the end of the century, possibly. But anyway, here we are standing here with the dollar index still trying to give a push here. The one breakout area here that we're seeing here a little bit, not breakout yet, but we saw a little bit yesterday, but we do have central bank today, but we're here with the dollar peso. And we've been talking about that, and we said, hey, look, the bulls need a daily close above 1960 to get above that. Our resistance have been 56, but it's 1960 where they got to get that daily close. One of the reasons that we've kept a bullish bias in the peso, despite, you can see right here, this whole time, has been bullish and like, well, what the heck? What do you mean bullish? Well, because we talked about the significance of this 1923 and how we were able to finally break above that. And so as long as we held above the 61% and above this breakout level, that 61% was basically the Alamo stand. And it made the stand, but we really didn't do much. We talked about that. We're like, whoa, God, nothing still hasn't happened. But we finally started to make a move yesterday, and we got up above our bias chart resistance of 56. But 60 is the level on the daily that we need to get above to really spark a new leg. Today, the bias chart resistance will be 1972. And in the dollar yen, faring a bit better here in the dollar yen. We had actually made a run yesterday here and tagged up in here in the 788. Our bias chart resistance at the time, I think, was 773. So made a run up there, but we did back. But dollar yen has come back with a little bit of resilience here. It obviously has more to do with the dollar in and of itself per se. But as compared to what you're seeing in equities, obviously still a lot of weakness here in the equity market. Excuse me. Australian dollar continues to stay weak. Did the bias chart this morning and had mentioned because we do the basic technical analysis in the Asian session. Excuse me. But we do the basic technical analysis then, and we're saying here about the Aussie dollar. It's still continuing to put up the good fight, trying to defend the 67.40-ish area here. I think we ever supported 67.34, but this market is still continues to remain under a lot of pressure. And really, to get things turned around, we got to get a daily close above the 68.34. So that's where we stand there. Dollar CAD still mired in this range. We're just simply not going anywhere. We're basically stuck in neutral, and we're just spinning the tires. We'll go and take a look at some of the other markets quickly. We have seen crude oil going and pull back down here. And actually, I thought we'd see a little bit better resilience here. Actually, I just got limited out of a position just now. Okay, so I was long, but it's been pretty frustrating in the other half. So I'm out now. But here's the deal. We've been falling. I thought yesterday looked like a pretty good area here to cover, although potentially we could make it down to the 61%, and we had this trend line. And once again, I always put my trend lines through the bodies. To me, like I said, I always give the same thing, how many people actually bought the low? How many people actually sold the very high? I mean, I'm sure a lot of us wish we had, but I'm just saying that's why I put mine through the bodies. So you can see we had a support level coming in. We just about tagged that support level, which was confluencing with the 61%. I'll take you to the smaller time frame here. So we made this dip down here yesterday, and I'm thinking, okay, well, we've done a lot of good work here, and we have some fib confluences here. Actually, this range, 161% of this range right in here, dropped us right down here. And I'm thinking, okay, this is not a bad area. But we pushed up and I'm like, okay, well, they're not responding all that well. So it opened the door for us to go and dip lower. A couple of us or three of us in the room got long down here, put our stops just below the lows for the day because we're afraid that, hey, look, maybe they're just going to take another dip, because below this I had 55.06 and 54.78. And they've moved higher, and I really wasn't going to give it any chance, any opportunity. So I took off half at 75, which didn't even sound like much, but wasn't going to stick around for 20 cents. And then I said, okay, let me let them run. I'm thinking, okay, now they're going to really rip, and I probably wish I hadn't covered. I'm like, what the heck? We just sat there for the longest time thinking, well, I thought, you know what? I'm not going to put my stop here at the bottom. I'm not going to take a loss on this sucker. That'd be stupid. So I just put it at 75 because I wasn't trusting the way this market was acting with a limit at 02, because my thought was, or my thinking was, pull this back up in here. They were struggling right in here. And I think it's right there. If you see here, yeah, you see there's that 56.97 coming across. Look how they struggle. So they're, once again, I always go with the bodies. I don't go with the tops, the actual top of the wick, bottom of the wick. as Blake says, many ways to skin a cat. But as I said, I look where there's the volume there. A lot of you guys, guys and gals that trade futures, you know, you see a lot of them do the volume analysis, and you can see right there. You see how I couldn't poke its head above that 56.97? I almost put my limit initially at 95, and you can see here, now we're kind of pushing a little bit higher, but I thought, you know what, if they do pop up above 56, it might just be where they stop out some shorts and dip back. But you can see how long we've been sitting here. So maybe we can push a little bit more with some momentum, because we've done, you know, I don't want to say so much work, but we've been sitting here for the longest time. So at this point, people are saying, you know what, I'm resolved to thinking this thing is going to go low, not going to go lower. So it'll be a matter of how much it pushes. The next area to actually be looking for is really around here, is it's 22-ish area here. We're just not getting the momentum that I would have thought after look at the work we did yesterday, okay? Then we come down here and revisit it. We take out the lows. So anybody that might have said, okay, now's the time to short it, okay, they're trapped. So now, considering how far we've fallen, we'll go back to the other screen. You're thinking, wow, we should see a nice good bounce off of this now. And we're just not really seeing it. Now, it doesn't mean that we can't move a little bit higher, but this isn't what you would have expected after the, look, we had a pretty good sustained fall, and we came down here, we pop up. Okay, so there's no, you know, I'm trying to think of the right word, but, you know, there's no sense of urgency to go on to cover. So like, okay, it looks like he's going to have to retest the lows again. And we got this 61%, we got this trend line. They'll probably test those lows. So we come down here, we test the lows, like, okay, now we're going to start to see some buying. And there's just not really seeing it. So once again, one of the reasons I've been bearish on crude was because I've been talking about these weaker purchasing managers indexes across the globe, and things may be slowing a little bit here in the States. So you'd have to wonder, this is all on the big jump of the whole situation with the drone attacks in Saudi. So you're thinking, well, God, then we could probably go on and pair back. And maybe the real value comes in right there. You see there, 53.11. So we shall go on and see, but this isn't that great of a rally back. We'll take a look at the SPOOs. We talked about this yesterday, if you remember. I mentioned about we were looking at it on the, you can see here on the 85. I think we'll see it on the 5-minute. Let me go back so we can go back to that screen. Yeah, here's on the SPOOs. And we do the charts here with the trading view. So once again, got to take into consideration is, like in this case, futures are trading like at a 2-point premium. I'm talking about gold. Futures in gold are trading at a $7 premium to the spot. So anyway, let me get rid of this. So this is that area we talked about. Remember 29.83, which would have been 29.85 in the futures. And I said, hey, look, this would work, maybe get stretched to, and then from there we can potentially go and ease back a bit. And we did push a little bit beyond this. I think this came up like to 78% or something like that. But you can see we did go and dip back from there in Asia, okay? Then we reassaulted the market, and this is a pretty good level here. If you're looking at 29.90, which would equate to like 29.93 and a half, 93 in the futures. You see there? There's a lot of good touches coming across. So the market got above it. We did get a gravestone doji. Market kind of languished, and finally we broke. The reason I had this in an oval here is because you look here, you break, you've got you know, nice little mini hammer. So if you break lower, people are going to have to, they're going to have their stops just below it. So, and then you had this trend line. So it really opened the door for us to go lower. But don't forget, we got back underneath this 29.83, and that really opened the door for this market to push lower. Now we're kind of recovering right now. I haven't done anything with the SPOOs today, you know, other than just covered a position where I got in from yesterday from this area here. But that's been it. I haven't done anything with it. I was kind of had my hands with crude, and I made my own mistake here in crude. I'll tell you what, I came in and I had shorted it, and I had a buy stop just in case this market started going to take off. It was early in the morning, and I covered, and I forgot about that order. I'll be doggone if they don't stop me out. I was so ticked at myself. But here's the deal is when you make a mistake like that, we all make mistakes. Just get the heck out of Dodge, get out. But I didn't. I said, okay, well, you know, this was the area that I thought, well, you know what, they can go in and run to. So it's probably not a smart idea. I mean, that's, you know, they may end up just running out of gas. Well, exactly, that's what they did. So I ended up taking about a 25-cent haircut on that deal, which is pretty stupid. I should have just got out when I realized the error I made. So I've been pretty much wrapped up with that. Haven't done anything with gold. Gold mentioned, we talked about that yesterday. We said, hey, look, there's a good opportunity for this to move much higher. Okay. And we talked about, remember yesterday when we got a little bit of a debacle and said, hey, look, we can still rally about, I think, $5 or $6. And we did. We didn't get up as high as far as I thought we potentially could have, because I think we potentially could have got up to 1523 in the futures piece, and that would offer a shorting opportunity. But other than that, that's about it. We'll see what the dollar index gets to, if we can get up to this 99.29-ish area. But right now, things are going the way of the buck. Once again, crude, bit of a disappointment here. You would have expected this thing to move higher. Sometimes when you see something like that, it's best to just leave a market alone. Gold, to me, I think probably presented, even though it was pretty dead, probably presented the best opportunity if you were trading it intraday. After I got out yesterday, I didn't. I should have gone and still stuck around here, because if you look here on the 5-minute here, we got above this area, this resistance level, and the market got a little bit tired here. And you can see we saw a nice move down, a rally back up, down again. I mean, there's been some nice moves if you're just kind of, you know, day trading, scalping around the market. Of course, I was in the wrong thing. I was thinking we're going to have a nice big day in the crude oil market, and that didn't happen. So, but other than that, that's about it. You can see here, Euro's coming under some pressure right here. So that's all we got for today. Thanks for joining us here on the Daily Roundup. Once again, take advantage of the ForexAnalytix offer. Buy 1 month, get 1 month free. Our seasonal offer. Also, if you try 6 month subscription, you get 25% discount, or even better yet, with an annual, a 35% discount. So good luck trading the rest of the day. Keep it careful. Like I said, you know, markets are always different. Like I said, yesterday we saw gold fall apart, and still gold kind of dancing around. And I was thinking today was going to be the day that crude was really going to rebound. Nothing here. And we've actually seen some good moves here in the SPOOs, and other than covering and getting out of that position, which I did okay. I'm not going to complain. But I didn't get back on it. All my time and focus was on the crude oil, and sometimes you look at this, and we had some nice moves over here, even in the euro, but that's the way it goes sometimes. But good luck trading with the rest of the day, and once again, like I said, look to take advantage of the offer. If not, like I said, we will see you on the FX Daily Wrap-Up, which would be Monday, because the show's from Monday to Thursday. Good luck.